Hey everyone, welcome back to Corporate Decoder, the place where we dive deep into the financial world and uncover the real story behind corporate filings, perhaps even finding out if a certain company is having a silent party or a financial fiesta. So grab your popcorn because today we're decoding Avidity Biosciences' latest move in the stock market, which is pretty electrifying. We've got a real-time event here, a company that's making waves in biotech, and they're not playing small balls. They've just announced a major stock offering, and we're going to break down what it means for them and for investors. Let's jump right in. Avidity Biosciences, which we'll just call Avidity for short, decided on September 11, 2025 to sell a whole bunch of their company stock. Think of it like a company saying, hey, we need more fuel for our rocket ship and we're going to sell more slices of the pie to get it. The slices they are selling are their common stock. It's a basic building block of ownership in the company. The plan is to offer a massive 15 million of these shares. And where are these shares traded on the Nasdaq Global Market? A pretty reputable place for ambitious companies. Now, for the exciting part, the price tag. They're offering these shares to the public at $40 a pop. That's a significant amount and tells us they believe their company is worth quite a bit. But here's a little insider detail. The actual underwriters who are like the main sales team for this offering, they're buying them from Avidity at a slightly lower price, $37.70 per share. That's their cut for facilitating the deal. And get this, they've also given the underwriters an option. This means Avidity is saying, hey, if you guys can sell more than the initial 15 million shares, you have the right to buy another 2.25 million shares. This usually happens if the demand is super high and they want to ensure they can fully capitalize on investor interest. It's like a bonus opportunity for the underwriters. So what does all this mean for Avidity's bank account? After all the fees and discounts are paid, they expect to rake in a cool $564 million. That's a huge amount of capital to fund their growth, their research, their whatever they need to push their company forward. And if that optional extra chunk of shares gets sold, Avidity could end up with almost $650 million. That's a massive funding boost. This whole big sale is anticipated to wrap up around September 15th. This big stock sale is happening under a specific type of registration filing called a Form S3, a common tool for companies to pre-register stock they might sell over time. It's like they're already prepared to sell these shares when market conditions are right. Now, inside the actual agreement with the underwriters, there are all sorts of promises and guarantees. Avidity is promising certain things about their business and the shares being sold. It's a legally binding contract outlining everybody's responsibilities and what happens if things go wrong. Here's an important note from Avidity itself. They're telling everyone that anything in this report that talks about the future is a guess or an expectation, not a guaranteed fact. This is standard practice to protect themselves legally. For example, when they talk about the sale actually closing or how much money they expect to make, that's all forward-looking stuff. And they're very clear that real life can be different from these projections. Things like changing market conditions or unexpected company problems could make the final outcome different from what they're saying now. This is about managing expectations. They also point to other places where they've detailed the risks involved in their business. This often includes information about their specific industry, their technology, and any potential challenges they might face. Basically, they want to make sure nobody says they weren't warned if things don't go exactly as planned. It's a legal shield. Now, let's briefly touch on the exhibits mentioned. These are the actual documents that back up what they're saying in the report. Exhibit 1.1 is the underwriting agreement itself, the big contract that lays out all the nitty-gritty details of this stock sale. It's the backbone of the whole operation. Then you have Exhibit 5.1, which is a legal opinion from their lawyers Latham and Watkins. This is typically about the legality of the stock being offered. And Exhibit 23.1 is a consent from those same lawyers, meaning they agree their legal opinion can be used publicly in this filing. Exhibit 99.1 and 99.2 are press releases. One was issued on September 10th announcing they were starting this offering, and the other on September 11th announcing they had priced it. These are the public announcements that get the word out. Finally, Exhibit 104 is the cover page information formatted in a special way for computers to read easily. And at the very end, we have the signature from Michael F. McLean, their Chief Financial Officer, who is officially signing off on behalf of Avidity Biosciences, confirming all this information. So let's look at this whole event from a broader perspective. Avidity Biosciences is a company in the biotechnology sector which is known for being high risk, high reward. They're essentially raising a substantial amount of capital which signals confidence from both the company and the underwriters that there's significant investor interest, or at least that the market can absorb such a large offering. Raising $564 million or more is not a small feat. This money is likely intended to fuel significant research and development efforts, accelerate clinical trials, or potentially prepare for commercialization of their pipeline products. Biotech companies often need deep pockets to get their discoveries from the lab to the patients. The price of $40 per share suggests that investors view Avidity's future prospects quite positively. This higher share price can also make it easier to raise more capital in the future if needed. However, it also sets a high bar for the company to meet investor expectations going forward. If their future performance doesn't justify this valuation, the stock price could face pressure. The existence of the option for the underwriters to buy more shares is a strong indicator of anticipated demand. If investors are clamoring for the stock, the underwriters will exercise this option to make more money. This is a good sign for Avidity, as it suggests a strong initial reception to the offering. However, as Avidity themselves rightly point out, these are forward-looking statements. The actual proceeds, the success of the offering, and the impact on the company's trajectory depend on many factors. Market sentiment can change quickly. Biotech can be a volatile space. The company also needs to successfully execute its business plan, and that involves navigating the complex and often lengthy process of drug development, regulatory approvals, and market competition. We need to remember that in biotech, a massive capital raise is often a necessary step to survive and thrive, but it doesn't guarantee success. The real story will be how effectively Avidity uses this newfound capital to advance its scientific innovations. Are they investing wisely? Are they hitting their development milestones? And are they effectively communicating their progress to the market? Overall, this stock offering signals a significant moment for Avidity Biosciences. They are betting big on their future, and they're asking the market to bet with them. It's a clear statement of intent to grow aggressively and to fund that growth substantially. The key takeaway here is that Avidity is making a bold move to equip itself with the financial resources necessary to pursue its ambitious goals in the competitive biotech landscape. The large sum raised suggests a strong belief in their technology and its potential to deliver value. However, the company will need to deliver on its promises to justify this substantial investment from the market. What do you think about Avidity's big stock offering? Is this a sign of great things to come, or just a necessary step for a growing biotech firm? Let us know your thoughts in the comments below. If you found this deep dive helpful, please give this video a thumbs up and subscribe for more corporate financial breakdowns. And don't forget to join our Discord community linked in the description for more exclusive content and discussions. Thanks for watching, and we'll see you in the next one.